Our next story is about a number, more than $1 trillion. That's what the developing world owes China, more than $1 trillion. And that makes China the world's biggest debt collector, one that loves cutting checks and piling on more debt on the developing world. Now, we know China is a loan shark, but even then, the latest data is revealing. It shows how big China's debt trap is. And once you get caught, it's hard to escape. So let's show you those numbers. What is China's loan portfolio like? Anywhere between $1 to $1.5 trillion. And what kind of loans are these? This includes bilateral lending, also loans for infrastructure projects like the Belt and Road Initiative. And who is China giving these loans to? There's a pattern to Beijing's lending. It targets countries in financial distress, especially in the global south. China is a major creditor for them. It gives more loans to such countries. 80% of China's loans to the global south fall in this category. They go to countries facing financial distress, 80% of the loans. But why does China do it? To exploit their situation, to extract a high interest rate. And there is no fixed number, no fixed rate of interest on these loans. There are just estimates. Economists say low-income countries usually pay an interest of about 2%. Now, for perspective, that's higher than what the World Bank charges. The World Bank charges an interest rate of 1.54%. China charges 2%. And this is plain robbery. And it doesn't end here. What happens when these countries default? Then they have to pay a penalty. And this is over and above the principal plus the interest, which is already high. And what is the penalty interest rate? Earlier, it used to be 3%. This was during the early years of the Belt and Road. But 2018 onwards, China changed this rate. From 3%, it shot up to 8.7%. That's almost 3 times higher. Now, let me explain this with a simple example. Imagine if a country borrowed $100 million. The annual interest rate at 2% will be $2 million. And if there's a default, the penalty rate is 8.7%, which means they'll owe at least $8.7 million extra. And this is on top of the original interest and the principal amount. But then again, our estimate could be wrong because there is little information about these loans. Their terms are shrouded in mystery. Like I said, this is just estimates. China usually keeps lending arrangements a secret. In many cases, loans are given at adjustable interest rates, meaning the interest rate changes as per market conditions. And in the last 2 years, interest rates have soared. So the loan bills of low-income nations have shot up. And this has led to a surge in bad loans. In the last 3 years alone, loans worth $78 billion turned sour. What happened to them? Some were renegotiated, others were written off. These defaults have forced Beijing to rethink. Chinese officials have tried to manage the situation. They've begun spending less on new projects. They've also ramped up emergency lending. In fact, let's look at China's lending in 2021. What was the share of emergency loans? More than 60%. While 30% of the loans went towards infrastructure projects. What do these numbers really tell you? China's massive lending operation is slowing down. When Xi Jinping launched the BRI, the lending spree allowed Beijing to expand its influence. But China took some risky gambles, very many of them. And now it's getting a reality check. This checkbook diplomacy is not sustainable, neither for China nor for the countries it has buried under debt.